Hey, what's up, everyone? Welcome to another episode of Tuck Notes Beginner Stock Talk. My name's Tucker, and tonight I'll be talking about Tesla stock, and I'll be going over a little bit about Tesla stock. Some of the news that came out, and then I will be going into Cathie Wood's views on what it's going to be like heading into 2022 and what to expect. And after that, we'll watch a video of her. Well, that's the video. And then we'll get into the Tesla price predictions for this week. Okay, so I can't be super loud because I want to go to sleep soon. But here we go. All right, Tesla closed, or is that now $1,067? I remember it was $1,069 a few hours ago. Okay, so that's a little sign, but let me get more into this. What is going on right now, and I'm not going to explain it that well because I'm going to have her do it, but we're still on a Santa Claus rally right now, even though it seems like we're not sometimes. If you're really hyper focused on whatever currency it is, if it's Dogecoin, or I'll use Dogecoin because sometimes that seems like it doesn't do anything, but yet it does, but you don't see it that often. But the rally is still going on, and it will go until New Year's Day. And on New Year's Day, we will start seeing the stock market change. So that's the good news. That's the cool news and the good news. I'm really happy to tell you that. That it does come with some bad news, though. And the bad news is that Elon Musk still has 1.5 million shares to sell this stock, which he plans on selling this week, which would be the last week of 2021. And if any news comes out about any new variant of COVID, that can significantly affect the stock price of any stock that is out there. So with that, I'm going to show a video. It's about 7 minutes, and but I really recommend watching it because she gets into talking about deflation and how that can be the biggest problem for some of shareholders, stockholders, investors, people that have leveraged on some things, and they're going to get their asses whipped, basically. She says it much politer than I do, but you can see it yourself. All right.
Also think that businesses that have spent the last year and a half scrambling to catch up with consumption, they were way behind, are now overdoing it. And we are in the middle of a major inventory build that is going to unwind next year. So that will be a cyclical deflation. And then innovation itself is inherently deflationary. We're seeing, just to give one example, artificial intelligence training costs dropping 60% per year, right? And AI is going to permeate every sector, every industry, every company. It's going to become, very competitive. So we think, and that's just symptomatic. There are so many other deflationary forces out there associated with DNA sequencing, robotics, energy storage, blockchain technology. So, and what we're also seeing is the convergence between and among these various innovation platforms, so that one S-curve is going to feed another and another. And so people are saying, well, then why are these stocks going down? The question we used to get is, we're in a bubble, aren't we? I said, we're not in a bubble. And now that our stocks are down, but the averages are up, many people are thinking we're in a bubble still. And we are, and it's called the benchmark stocks, which are going to be disrupted as the traditional world order is disintermediated and in often cases is going to be destroyed by this new world. So you can say I'm talking my book, but those are two massive secular deflationary forces. One is extremely positive. Deflation, learning curves, cost declines, price declines in innovation means we'll get a boom in innovation. The other side of that is there are many companies who, especially since the tech and telecom bust, and then again 08, 09, they've catered to short-term oriented shareholders who are scared. They've been scared ever since 08, 09, and they want their profits now, they want their dividends now. So these companies leveraged up, buy back shares, manufacture earnings, and didn't invest enough in innovation. They're going to face a lot of problems, and they will face the bad kind of deflation. We've been saying for some time that the risk to the economy is more on the side of deflation than inflation. So as COVID created all the destruction that it did and supply chains really being thrown off, we've been through a period here of inflation, which I think investors are baking into the cake. That's the underlying assumption out there, that we're in an inflationary period and that it was turbocharged by the supply chain disruptions that occurred during the coronavirus. And of course, they will be focused on monetary policy when they say that. I am a student of economic history, and I've lived quite a bit of it myself. So seen a lot of markets and started in the business during the 70s. I was in college when inflation was raging. So I know what that is. And I truly believe we are not going back there, and that anyone planning for it is probably going to be making some mistakes. So the three sources of deflation that we see, to go into a little more detail, on the innovation side, technologically enabled innovation, we are in a period today like we have never been, never. I mean, you have to go back to telephone, electricity, and automobile to see three major technologically enabled sources of innovation evolving at the same time. Today we have five platforms: DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology, all of which are deflationary, and not just by a little bit either. Jeff Gundlach and Howard Marks, and I think Stan Druckenmiller and Ray Dalio, all of them, I think, have been very, very concerned about a deflationary bust. And we agree with them in this respect. We think it's going to be balanced by a deflationary boom. So that's where we differ. But where we agree is that there are companies who thought the world would never change and have been, again, catering to short-term shareholders who wanted that extra penny or two in earnings, and so got it by having the companies leverage up and take more debt and shrink the number of shares. And they've also been focused on dividends. They are probably saddled with products and services that will become obsolete because of the record-breaking amount of innovation taking place today. And in order to service their debt, they are going to have to cut prices and move those goods and services that are on their way out anyway. So I am concerned about that, and I think there's going to be a lot of confusion around it as well. So that's why we keep our eye on the innovation ball, because that is going to balance these issues out to a great extent. But what it will also mean is that the traditional GDP numbers we're going to be seeing are going to be very low. And so, and growth will seem very scarce. I think it will proliferate over time, and that some of the companies that we own, the stocks we own, They're not in any index out there. So a lot of public market investors aren't exposed to them. But we think there are going to be a lot more of those opportunities.
So, there you have it. That's Cathie Wood's thoughts. She's no joke. She's the real deal. And big wake-up call. So, in layman terms, stocks, the prices of stocks are gonna go like smaller and smaller and smaller and smaller and smaller, followed by a big correction up by AI if you're in the right stocks. That's why Tesla's a great stock. And so with that, I'd say if you find this movie or if you find this video helpful or this channel helpful, if you subscribe to this channel, I'd really appreciate it. And viewers, I love you guys, and if you like these videos, it'd be cool if you push the like button. So with that, Tesla's price prediction for this week. Okay, I made it real simple. If we have any news, okay, one thing that could happen is one thing for sure that most likely will happen is Elon Musk will sell off his 1.5 million shares of stocks, which he already did a little bit ago, and that didn't affect Tesla, but we might see a little bit more volatility now that we're in a little bit of a swirl. But if there's no news and Elon's stocks get sold and there's no news about any new variant, we could see Tesla being up at 1,200 by the end of the week. If there is any news that comes out about a new variant or COVID-related issues, we can see Tesla going down to 1050 to testing down to 1,000 again. So, pretty simple. We're on a Santa Claus rally, and the only thing that will affect it is a little bit of Elon Musk selling his shares, but that won't be much. But any news-related things related to COVID, because that seems to be the biggest thing that hits the stock market down. So I don't give advice, but I have experience from the last 2 years, and I got my ass whipped real hard because I had no idea what's going on. And this year there's people actually talking and telling you, be careful before this happens. So just be cautious. Sometimes it's better to just watch along the sidelines and then being in the middle of it. But I love you guys, and thank you for watching and subscribing to my channel, or our channel. And I hope you guys have a great week, and I'll talk to you guys later. Good night.